Good afternoon, everyone. I hope you all had a great day. If you decided to trade, I'm going to go over my daily plan as well as a live market commentary I provided through the Hive Day. If you don't follow me already on StockTwits, that's where I post everything, the daily plan and the live market commentary of at least the opening session. ChocolateLabTrading, I will leave a link in the description. So, without further ado, let's go into the day. So the first thing I put on StockTwits this morning, good morning, contract rollover today, CPI numbers tomorrow, and one more thing that we'll discuss in a bit. But this was the reasoning that I said, unless you're a wizard at reading the order flow, take a couple days off from trading and study. So that one other thing, if you watched the videos last week, I was talking about on the TPO, we built a balance area. You know what? Let me pull up the actual TPO chart. So, looking at our TPO chart, I spoke about all through last week live that we had a balance area. We broke out of the balance area, tested the high, rejected it, and now we're building balance up. So on this down move that brought us into this area, we left some market structure to the top side that we need to clean. And we already started, as you can see, cleaning up single prints. We actually gapped over this one, so we will revisit that one eventually. But we have structure that needs to be cleaned. That's what we're doing now, and we're trading out of balance. We are now going to find balance. So that as well, that little bit of news or analysis along with the CPI numbers and contract rollover. Unless you're scalping, super small moves with super tight risk and solid risk management, it's just not worth trading this. If I go back to StockTwits, I actually said when I posted my daily plan here, I said how I was very reluctant of posting a trading plan. I didn't want anyone to try to trade off of it. I never do, but now more than ever, because the reasons that I mentioned. I said trading as a career is about capital preservation and finding the best risk to reward. So capital preservation, risk management, and knowing when and where you should be a market participant. And for the reasons that I listed, that is definitely a few reasons why you do not want to participate. And it's all about risk to reward. Your risk is much, much higher when we're trading in these areas and we're around these news events with the rollover, everything. Your risk is so much higher than it was if we're just on a normal trading day. And in the long run, it's not worth it. You may have one day that you're good at it or whatever, but this is a career. This is day after day, month over month, year over year. Just don't do it. That is my 2 cents at least. So I pointed out that TPO, saying how we're cleaning up structure, we're going on our way to find balance, is what I was trying to point out there. And then I posted a picture of the footprint chart. So what do you guys see on the footprint? Where are buyers? Where are sellers? Is anyone trapped? These are things that you need to be aware of. So this is a 4-hour chart. And look at this. This 4-hour closed. And look at the amount of volume underneath. We gap up Sunday above these guys. All of these contracts that were sold, whoever, or, I'm sure obviously it's not just one participant, but all these people are underwater. So when we pop up on Sunday and come back down to them, they are going to provide the floor for us. Why? Because for the ones that didn't sell out of their positions here for a loss, they are praising whatever they believe in down here, that they're able to exit their positions for minimal losses, and they are what is going to provide the floor. All these guys that are short, buying back their contracts, they are the support. They are the buyers over here. This is why we see buying imbalance. So that's what I was trying to point out. And of course, provide the floor. We go up, and you could see through the volume here and here, all these guys now, they're underwater. So something you need to be aware of, if you're looking to go short here, you don't want to short this until we accept back into this volume. Once we accept back into this volume, maybe you could look for a rejection from here. But that's what the footprint helps you definitely do. If you think, if you came into Sunday thinking this whole move up was bogus, the footprint tells you that, at least for the time being, you're wrong. So I released, or came out with my daily plan, and again, I was telling everyone, please do not trade this. Yeah. So after market opened, I believe this was, yep, just about a half an hour after market opened, so initial balance is closing. A lot of people in StockTwits were calling for a short, saying the top is in, this move is going to be retraced, you know, the whole 9 yards. So I put this, I said keep an eye on the daily. If you're trying to short, you want to see, market makers is a word I use, but you could say institutions, big hands, doesn't matter, whatever. You want to see that the people with the money, the whales, are on your side. Wait for proper selling imbalance and volume nodes. And I said how I will go into more detail here. So if you've listened to my videos before, when you're looking for a short, you want to see this volume distribution look like a P. Now, someone who may not know better may say, yeah, this looks like a P, but look at where we're trading. We're trading above all this volume. All this volume's underwater. But wait, I thought there was a double selling imbalance. Isn't this good? It's context. It is context. This isn't a clean P-shape at all. I wouldn't actually call this a P-shaped distribution, just because look at the amount of volume we're doing up here. There's still lots of market participants willing to transact up here. We're going to go until they're all exhausted. So that, as well as we do not have a P-shaped distribution, and not a clear selling nodes. All those things tell you that hands off for the short, at least for the time being. And as we'll see, I actually walked through the high day live through StockTwits. I went back to the 4 hours. I said, look what the 4 hours telling you. Do not be stubborn. Wait for the market makers to tell you it's time. So what am I talking about? Look at the 4 hour. All of the guys who are underwater that I was talking about in the 4 hour just a couple of minutes ago over here, how they provided the floor. We closed the, or sorry, we didn't close the candle. I'm saying we're trading up here. People at the open tried to short this gap up and all got ran over. Look at what the 4 hours telling you. The 4 hours telling you that if you're shorting here, you're by yourself, you and no army. Look at all the volume that's supporting below, all the shorts who are underwater. This is fuel to the upside. So this is a look at the 30-minute footprint chart for the opening session, the opening candle. And exactly what I pointed out in the 4 hour, whole bunch of people trying to sell at the open. And these thin volume nodes, what is this? This is all these people down below being ran out of their positions, being blown out of water. This, for the most part, is not buyers and sellers transacting with each other in these thin volume nodes. What this is exactly what I said. These guys just marketing out of their positions, pushing price up very quickly. And I moved down to a 5-minute chart for this. I said, look at your smaller time frames, see what bulls are doing. Can you see their line in the sand? We'll cover this later. So this is the opening candle, and I highlighted here what they are doing. What the bulls are doing is they are moving a bid. You could see from the buying imbalance, they are moving a bid up. Meanwhile, sellers, they just cannot have a sustained offer, let alone move an offer down. They're just being blown out of the water. Now, to touch on what I was talking about before, that doesn't mean that you can't take trades today. Even to the short side, you could take trades today. So where could you take trades? Well, we had this push up right at open with a 0 print in the opening 5-minute candle. Close with this volume. So what we're going to want to see if we're not short off the 0 print is the open of this next candle. We get another 0 print. We don't even have the juice to pull up and meet the high of the previous candle. So with that 0 print, you know that sellers are moving down. Perfect. are short and you get about 10 points out of it. All this thick volume that we see here, 2000, 1800, 1600, 2000, 2000, all of those. And then towards the bottom, we get this 200 buying in balance and at the cloud. So when you're scalping the tape like this is exactly what you're looking for the exit. And even though this originally was a scalp, you get a full 10 points out of it. So I don't think anyone's going to complain with $500 of profit per contract. But anyway, the point of this was to show how the buyers are moving a bid up. Okay, so as we continued pulling up and forcing sellers out of their positions, I wanted to draw attention to the amount of volume that was doing up here. I said, look at this volume up here, keep an eye on it. So if we could continue this volume, building this volume out here, we're going to want to see what is going to happen in this thin volume area, which is this. This is a 4-hour to the right, to the left is a daily candle. If sellers can move down and accept price into this thin volume node, we're going to retrace it. We're going to trade back into it and then revisit this this dense volume area to see if sellers can move down or buyers can defend their position and then put the pressure back on the bears up here. So I said keep an eye on it. Nothing telling yet to go short, but it's getting interesting. Okay, so we built out a little bit more volume towards the top. We're pulling below now. So what are we looking at here? We're looking at this delta, these numbers here. We want to see signs that the sellers are moving down on the tape. We want to see them chip away at this buying imbalance, chip away at this delta, and that is what we are looking for. And at this point, this is the bulls' line in the sand, really. We start accepting into here, and they're going to be pushed off the cliff. So they really want to defend here and push price back up into this top volume node where you see the buying imbalance. And what we're going to want to see if we are bullish, we're going to want to see this delta go from 20,000 to 21, 22. We want to see it build up. And if we're bearish, we want to see it go down to 20, 19, 18. You get the point. Just want to say thank you to everyone. I hit 60 subscribers today. It means a lot. If you're not subscribed, please do. And let's get back on with this. So here I went to a 5-minute chart. I wanted to point something out. And this is just another way that the footprint can help you so much when you're looking for a short. Or maybe you're in a long, and this gives you the confirmation that we're still going to keep going. So you could see that we had lots of sellers here. They got ran over, leaving these thin volume nodes. So we come up, thin volume on top, temporary exhaustion. We're coming back, and bears want price to be accepted into this thin volume area. We come, buyers showing their hand. Sellers don't even have the juice to completely fill this. You could see that the tape is starting to thin up, get a zero print. So you could already tell that maybe if you're short, maybe this isn't the trade to be in. Maybe you cut it there. Maybe you set your stop to break even. This continues chopping. Sellers are still active. You got a zero print with thin tape. Maybe this is looking good. And then this is going to be the first sign that, or this is going to be another sign. We already have signs that maybe you're wrong. But look at this distribution on this candle. We get a B shape. You've definitely heard me speak so many times about volume profile distributions and what they tend to signify. In most cases, of course, it always depends on the context. A B shape is accumulation. And then you could see when we close the candle, we're closing above the majority of the volume. What does that mean? All these guys who are shorting, this 4,100 contracts that were sold right here, all these guys are negative in the positions. If they're not already stopping out, we pull up anymore, they're going to be begging to get out as close to break even as possible. And so you should really be cutting the short there if you're in it. And then this next candle is screaming at you. Why? We get a zero print first off, so we have exhaustion, double buying imbalance, and then I want to point out, look, 2,000, 3,000, 4,000 contracts being done on either side over here, and then look at this. We get 0, 400. Sellers are exhausted. They cannot do it. They tried to move a bid down, but look at this. We're moving a bid up now. Cut the short, take whatever profits you can. If you can't take profits, stop out, because you are wrong. And the people who did not stop out, who maybe couldn't see this, as we could see here, we had sellers, and look at these thin volume nodes. These thin volume nodes are these guys tripping over themselves to exit their positions. So that's just another way that the footprint can help, and just little tips and tricks that you can use. So we continued up, and now the same volume node that I was talking about before that I said was interesting, now it's really getting interesting, and here's why. We have a selling imbalance, and we have what looks to be at least temporary exhaustion. You can see obviously 36,000 contracts, 21,000 contracts to hundreds. Huge imbalance, but it's not there yet, and I believe I said that. I said sellers throwing the kitchen sink right now, doing a good job, just need a little more though. We want to see these nodes build out. So what I was talking about, you have to look in context. Yeah, this is a lot of contracts being sold. We have a big imbalance, but look underneath us. Look at all this volume that is underwater right now. So we want to see these volume nodes build out. We want to see that the big hands, the whales, are on our side, and that they are winning. So they're doing a good job, but you want to see that volume bigger. And so another thing, where would a bull's line in the sand be? Just under this volume node, because they do not want price to accept into this area. We do, then we'll retrace it and backfill the volume. And it's pretty obvious where sellers' volume line in the sand will be, is just above the high. We pop that, we pop their stops. So definitely keeping a close eye. And look at this. This was 8-minute difference of posting, so probably about the same of when these two screenshots were taken. Buyers were adding about 2,000 contracts over here, and when we pop into the selling balance, they added almost 10,000 contracts. So the bears are doing their job, and it's clear as day. We could see on the footprint. They added heavy size. So now what's going to happen? We're going to come into this volume node where the buyers, we know they're located. Just how they defended their position the first time, they have to do it again. If not, exactly what I said, we'll come into this low volume area, backfill the volume, and provide a nice short for those who can find it on the tape. And I pointed out, let's look at a 5-minute chart. This, so I'm showing off for larger time frames, 4-hour, 30-minute, daily. But footprint, you could look at it on a 1-minute chart, 5, doesn't matter. And this is what it looks like on a 5-minute chart. And what do we see? We see an offer moving down on the tape. So if you're in a short, this is exactly what you want to see. Have a previous bid here in this area, and this is where they're trying. We have a zero print at this time, but this is super heavy. And when we're looking at the daily candle, as we were, and we're talking about these two volume nodes fighting it out, defending their positions, it's no different on a 5-minute chart. Look at these two volume nodes, very thick, and they're going to defend, and one of them's going to break. Same thing, regardless of time frame. So that's what I was just trying to point out, an offer moving down. Okay, so I said, see how much buyers added? It's now on the sellers to defend their position again. So before, I believe it was like 36,000 contracts down on either side, and now you could see, obviously, they added almost 20,000 contracts. They're doing their job right now. So it's hot potato. Now it's the sellers. They have to defend their position. Just one more thing, actually, I just forgot. What we're going to want to see is this, what we're going to watch is this delta and this delta. When we come in, after the bulls defend their position and we push it back into this volume node, if you are bullish, you want to see this delta become negative 20,000, negative 19, 18, you want to see them chip away at this delta. What that signifies to us is that buyers are moving up in the tape, and if you're bearish, when we pull into this volume node, we want to see the opposite. We want to see this delta become 41,000, 40, 39, and that a seller's moving down on the tape. But another thing to add, actually, is say we're bearish, we come in here, what we want to see is 41, 38, but if we pull back after coming in here, say we get this down to 38,000, sorry, but 38,000 contracts here, we pull back in here, and we go then 39, 40, 41, and we're back at 42. If we get to 43, 44, that's a buyer's adding. They're defending their position. Very important. So there's just another update, and I was trying to point out, see how the buyers chipped away at the delta. I didn't realize that when I quote, I don't know what to call them, they're not tweets, I don't know, twits. I'm just going to say tweet. When I quote tweet something that I did already, I didn't realize that I couldn't put a picture, which is what I tried to do. So give me 1 second. I believe I still have the screenshot, and I could just show you. It's pretty important for learning purposes. Oh, shoot. I don't have it. Okay. Well, obviously this is 42,000. When we pulled down eventually in real time, this became 38. So sellers were moving down. Oh, it was right here where I was showing it. But yes, we clear as day on the tape that sellers were in control. They're moving down. And I believe that may have been it. That was the high day. I gave that live. I was walking through the tape and sharing what I saw. If you are interested in everything that I've been showing here on StockTwits and on YouTube, I'm going to have a room where I'm going to teach all this stuff, plus you know, everything else that I'm not showing publicly. Just, you know, there's tons of tips and tricks that I use on the footprint, reading the delta, reading everything, the order flow as it comes in, as well as TPO and market structure and you know, what it takes to trade. So if you're interested, send me an email. I will reserve your spot in a room, just because I kind of want it to be a small room. I don't want to have a room of like hundreds of people where they're asking me, you know, the same basic questions. I want a small room, people who trade the same, like-minded, and from there, you know, hopefully build a whole bunch of self-reliant traders. So just shoot me an email. And in about like maybe a week or two, I will post a video about the room and exactly what it's going to consist, what I'm going to provide, obviously, you know, pricing and what to expect from the room. Obviously, on top of educational things, there'll be a private Discord and stuff like that, but that's for the future. I'll upload a video when it's time. Hope you guys all have a great rest of your day, and I'll see you guys tomorrow.